Alrighty, welcome everyone to today's first meeting of the Orange County Funding Corporation. I'd like to call this meeting to order and call the audit committee that the time is now 4:01. Can I get a roll call?
Sure. Lee Benton.
Here.
Dean Tamburri.
Here.
Mark Green.
Here.
3 of 3 members present. For staff, myself, Bill Fioravanti, Kelly Riley, Marty Barras, and Matt Dagley doing audio-visual. We have our state monitor, Brian Sandvich, here. Our general counsel, Rudy Zoda, via Zoom, and Melissa Zott, our guest from PKF O'Connor Davies.
Okay, thank you, Bill.
Sure.
And again, a proof of notice of this meeting was properly provided, and that's on page 2 in your packet. Next, on to minutes. Can I have an approval of the minutes for November 19th, 2025 Audit Committee? Again, I was not here and a member at the time. Motion to approve?
Motion.
Dean, second. Does anyone have any comments or corrections?
No.
All in favor? Aye. Motion passes. Okay, let's make it on to new business, which is a review of the draft 2025 financial audit from PKF O'Connor Davies. Bill?
I think we'll go right to Melissa. The auditors have been here. They were here last week for 3 days, was it? Not even. 2 days? Was 3?
3 days, yeah.
Right. But it was very efficient. Kelly and Marty, as usual, do a tremendous amount of work preparing for it and always supporting the auditors. They had a lot of documents ready in a shared Dropbox folder, so a lot of it was ready to go, and I think you did a lot of work in advance before you got here.
Yeah.
Of course.
So, but great team. We've had a great experience with them for sure. I think it was as efficient as ever. Seems to get better every year. But without further ado, I really give it to Melissa to present.
Okay, and we have quite an extensive packet from here, so where do we start?
So we'll start with the PowerPoint presentation.
The little cheat sheet.
Yes.
Okay.
Okay, great. So my name is Melissa. I was the engagement partner on the audit for this year. I've just gone ahead and...
Excuse me, one question.
Oh, sure.
Is this on the internet for people to see what we are looking at as well?
No, it did not. But
Okay.
we can post it. I think we should post it to this meeting.
Maybe at the final meeting, we should have that for everybody on the internet who's viewing to also see what we are seeing.
Yes. Okay, great.
Thank you.
Agreed. Thanks.
Thank you. So today we're just going to talk about some required communications. We'll go over the income statement and then the balance sheet, and I've also provided the investments at fiscal year end. So certain communications include some responsibilities of management. First and foremost, selecting and implementing the accounting policies that are appropriate for the funding corporation, making sure that the financial statements that you have in draft form are presented in accordance with the United States generally accepted accounting principles, making sure that you're establishing internal controls, but also maintaining those controls. So doing a periodic review, making sure that there's proper checks and balances, compliance with all of your laws, regulations, and any provisions of the contracts that you enter into, and then providing us, as your external auditors, all of the financial information that we request and go back and forth with. I just really want to give a big thanks to Management Bill and Marty and Kelly, because without them, and Shannon too, without all of you, I don't think we could have gotten this efficient audit really at the end of the day. So thank you for that.
So you're talking about the narrative part of these documents that we've received, all of these
Correct, yes.
portions here that you just mentioned are those?
Exactly, yeah. And we'll go to the management letter at the end after the numbers, and I'll just point out some of the extra boxes that aren't necessarily in here.
Okay, and if anybody has any questions, please raise your hand. We'll take them, we won't wait till the end, we'll take them as you have them.
Thank you.
As your external auditors, we also have certain responsibilities. We have provided draft deliverables, and we anticipate issuing an independent auditor's opinion that's considered an unmodified opinion. It is the best opinion that the funding corporation can receive. Sometimes you might hear it referred to as a clean opinion as well. We have issued a yellow book report. That's a report on controls. And then we issue an investment report. So it goes over just your cash and your investments. Any deficiencies that we identified in your internal controls, we do communicate those to you. Again, we have a management letter separately. We have not identified any material weaknesses. We have not identified any significant deficiencies, and even our control deficiencies that we've had in the past have been resolved, so there's no control deficiencies as well. We do advise management of the appropriateness of the accounting policies, so we get the policies, make sure they are appropriate. Any fraud or illegal acts that were noted during the audit would have brought up to you prior to today, so I'm happy to report that there were none. We did not identify any.
Actually, ma'am, can I ask you a question?
Oh, sure.
So
Go ahead.
let's say you did find fraud.
Mhm.
Who would you bring that up to?
So it definitely depends on who we think started it. Generally speaking, I would bring it up to the board chair, and I would also include the board. At that point, I would have investigated enough to understand what the actual facts are and make sure the facts were correct. So I don't want to present something to the board that's not accurate.
But there is, your policy is to go to the chairman
Yes.
since that person is in the day-to-day operations of the.
Exactly, yeah, and
Thank you.
I generally would include the entire board as well, but it's important to let you know right away once I have all the facts.
Thank you.
Mhm. I'm happy to report we did not encounter any significant difficulties as part of this audit. It ran very smoothly this year. No uncorrected misstatements noted, no disagreements with management, and then we did maintain independence from the funding corporation. On to the next slide. This is the income statement of the corporation. There's currently operating revenues, expenses, and then non-operating revenues. Currently, there are no operating revenues reported as of December 31st, 25, but you do have operating expenses. There were $250,000 spent on projects and special initiatives. That was specifically the new generator to the Hudson Valley Food Bank that was provided in 25. Your next line item for your operating expenses is your professional fees. Professional fees for the funding corporation, the largest portion of that $114,000 was $90,000 of management fees to the Orange County IDA. So it's their portion of the operating costs. You had about $13,000 specifically for legal fees. And then you had about $11,000, which is audit and bookkeeping costs. So that's all included in your professional fee line. Next line is your bad debt expense. You can see that that's a negative expense. You do have some receivables that are fully allowed for. Luckily, the funding corporation was able to collect on those receivables. So even though they were allowed for the possibility that they weren't going to be collected, the corporation was fortunate enough to collect those at $8,700. So the makeup of those would be a receivable from Cream Enterprises, there was a Paris Corp, and then a Ron DeGroot for the receivables that you collected. Next is your insurance expense. That would be for any insurance policies that you have that covers the corporation. And that totals your total operating expenses of $361,000. You did have some non-operating revenues to offset those expenses, and that was entirely interest income related. That came out to about $72,000. Relating to that, that was about 2 CDs that matured during the year and 3 T-bills. And then at fiscal year end, you had 3 investments, so we accrued the interest associated with those, and that's included in the $72,000. So overall, your change in net position, excuse me, was a negative $289,000. So you started off the year at about 1.8 million. You ended the year almost at 1.6. So let's go to your balance sheet on the next page. Well, your assets, your larger assets here are your cash and equivalents and your investments. I did provide specifically the 3 investments that make up the 1.5 million, which we'll go over after the balance sheet items. Accrued interest receivable, the $15,000, that's the interest that was accrued for the CDs and the T-bills. So we were able to break that out this year instead of grouping it with cash. And then lastly, on your asset side is your prepaid expenses, $4,700. That would represent your insurance policies that cover both fiscal years, so that would be the portion that you've already paid that will be expensed next year. Next is your liabilities, which is accounts payable, accrued expenses. You have about $28,000 on that line. Of that $28,000 is 22 is due to the Orange County IDA, so that got paid subsequently. And then a very tiny portion for legal expenses. So that brings your total net position to almost 1.6. At the bottom of this page, you can see the 3 investment types. You have the $600,000 CD. That CD is at a 3.88% interest. Last year, you also had a $600,000 CD, and that was at 5.1% interest. So we know the interest rates dropped this year. So you did go from the 5.1 to the 3.8. And then you also have 2 U.S. Treasury bills with maturity dates March of 19, so it's coming up, and then October 1st. These are 0% Treasury bills, but you do get the difference between the price and the discounted price. So that totals your 1.5 million. If there's any questions on these numbers before we go to the management letter, I can take those now.
Okay. So is it appropriate to ask people who have on the hard copies questions with the financial statements at this time?
Sure, yes.
Okay. So on page 4 of the financial statement, I see projects and special initiatives. Since I'm a new member here, was the $250,000 from?
Page 4?
Sure.
Page 4.
So I give you a packet, it starts with this. There's 2 colored sheets. The first colored sheet separates the management letter and the financial statement, so you would go after
Thank you.
that, no problem.
Oh,
No
okay.
problem.
That's okay, all good.
And then you would go to page 4 after that.
Got it, thank
Okay,
you.
great. No problem. I try to make it a little bit easier. And
That's okay, yeah. I didn't, they handed those out early. I just kept what was
Oh, no,
given to
no
me
problem,
before,
no
so.
Sure. So the expenses of the $250,000, that would be the new generator
Oh, that was
for the
from
Hudson
before.
Valley. Mhm.
Good, thank you.
Alrighty. On page 8, the reconciliation of loss from operating to net cash operating activities, $361,000. That's just what it turns out to be is the end of year balance, correct?
Yeah, that would be the operating loss. So that wouldn't necessarily factor in your interest income, because that's specific for like a non-operating investment activities. But that's the 361 operating loss.
Okay. And I think that's all the questions I had. Other members, questions? Okay, I think we'll go to your next step.
Perfect. So on the first part of this is the management letter. I just want to walk through this really quickly. On page 4 of this, it's the status of the audit. So again, we do anticipate issuing an unmodified opinion. The Paris report are due March 31st, so just make sure that, that they're filed before then. And then on the following pages, the boxed items were mostly covered on the required communications on the PowerPoint. But I do want to point out specifically on page 8, the bottom box on page 8 is significant risks. And as part of the external audit process, we do a risk assessment process. And there's 2 significant risks we identify. And we do identify in most of our entities that we audit. The first one is management override of internal controls. Generally speaking, management has access to a lot of items. So there is a risk that management could override those internal controls. We do look at the journal entries and the board approvals, making sure that there's proper oversight of that. So we're happy to report that our audit procedures did not identify any override from management on the controls. The second significant risk is your improper revenue recognition due to fraud. That is an AICPA mandated significant risk. It's a really hard risk to overcome, just with the entity itself. So we do develop audit procedures specific to that. And we are also reporting that there were no improper revenue recognition due to fraud. So happy to
Good.
report on that. And then page 10 is the internal control letter. And this letter is identifying the different levels of deficiencies we could have, material weakness being the highest, significant deficiency being the second, and then generally we'll have other considerations. And this is just stating that we did not identify any deficiencies in internal control for the corporation. On the horizon on page 11 and 12, these are some upcoming GASBs. This will impact both organizations. You've got GASB 103. This is really going to impact the corporation on the first bullet point, which is your management discussion and analysis. That's that first couple pages in the report. This GASB is just trying to consolidate the MD&A and make it more understandable to the reader and not as repetitive. So that will change a little bit, you'll see, but will help with the implementation of that. And that's really the only bullet point here that will impact you, so that's great.
They're constantly inventing more GASBs. I can't remember what
They
the
are.
GASB numbers were when I started
Yes,
with the legislature, but now we're up to 104, 105.
yeah, it's quite a lot. I don't think the 104 will implement the corporation, that's related to capital assets. The funding corp doesn't have any. And then the subsequent events is just adding additional disclosure on what type of procedures are performed for the subsequent events and if there are any identified. Okay.
Here's something that the county, one of them, OPEB, do we have to claim OPEB anywhere?
No, not here. I don't think any post-employment benefits are offered. There is a voluntary
Wouldn't
deferred comp.
employees here as part of the county?
We're not part of the county.
Correct.
Well, that's true, okay.
Yeah.
Well, we went through all that.
Yeah,
Right.
right,
At one
okay, yeah.
point.
It says discrete component unit of the Orange County, yeah. Okay, okay, that's fine.
Page 13 and 14 goes into the adjusting journal entries we identified. There were two noted. The first one was just our entries from last year, just posting them again this year, and then accruing the interest for the interest revenue for that.
So here's, I've never seen these before. These misstatements, errors, or just corrections?
They're just corrections. Yeah.
Reconciliation corrections, kind of.
Yes,
Right.
yeah. So the
Okay.
first one we reconciled to the prior year audit.
Mm-hmm.
So that was just a reconciliation item. And then the accrued interest receivable was just increasing the revenue for the interest based on the amount earned in the current period.
Okay, good.
But I apologize, but it appears, the way it's stated, corrected in
Yeah.
misstatements, it's really correcting it. I mean, that's all. I mean, adjusting entries, it's not really,
Yes, it's a,
just because it sounds.
the
There's no
verbiage.
misreport.
Yeah,
That's why I just want to make
Yes.
sure that we're, that's the standard, but
It's the verbiage
So
that we're
people-
required to
people hear
use,
that. I understand.
unfortunately. Yeah, yes,
understand.
but it is, yeah.
thank you.
Absolutely. So for the funding corporation, that would conclude my overall presentation, but again, any questions?
Okay. Does any committee member have any questions or anything with form or substance? All right, so hearing none, again, no reason to vote to accept because we're waiting to accept the final in 2 weeks at the next full meeting. So again, thank you very much for your submissions. Very informative, lots of information, and of course, also lots of narratives to cover each section and such with both of the financial statements and schedule of cash and investments. So I want to thank you very much for everything. Any other questions from committee members?
No.
Anything to bring forward? Bill, anything? All right. So seeing nothing left to do, a motion to adjourn is in order. Motion?
Motion.
Dean? Second, Mark? All in favor? Aye. Opposed? Carried. Thank you very much, everyone.
Thank you.